Shonna Tucker, thank you so much for joining me today.
Shonna Bisagno, my pleasure.
This is Shonna Tucker from Benchmark Mortgage in Boise, and I'm Shonna Bisagno with Keller Williams Realty Boise and the 72 Sold program. Shonna is going to cover mortgage points, discount points, what they mean, and how they can be used to a buyer's advantage.
Yeah, so this is the second video we've done on a series that we're calling More House, Less Money, and we're talking about interesting and maybe creative ways where we can lower the payment for buyers and making home purchasing more affordable. Today, as you mentioned, we're going to talk about how discount points work. Let's talk a little bit about the terminology first off. Okay, discount points are also sometimes referred to as mortgage points or buying down the interest rate. These terms are used interchangeably and they're all one and the same thing. One discount point is equal to 1% of your loan amount. So really, in essence, what a discount point is you're prepaying some interest in exchange for a lower interest rate. How much does a point buy you? Well, it can change from day to day, but on average, it's probably good to think about it in, maybe a point would equate out to approximately a quarter of a point lower on the interest rate. Okay, but again, that's going to change a little bit from day to day. So an example, let's take a look at a $400,000 loan where somebody would pay 1 point. Remember, 1 point is equal to 1% of the loan, so that would equate out to $4,000 prepaid up front. In exchange, what you're doing is possibly taking the interest rate from 7% down to maybe 6 3/4. And again, interest rates change daily too. So this is just an example for the purpose of illustration, really more than anything. But at a 7% interest rate, your monthly payment on that $400,000 loan would equate out to about $26.61 a month. Whereas 6.75% interest rate would put your monthly payment at about $25.94. This is principal and interest only, but that discount point bought you about $67 a month in permanent savings over the life of the loan.
Wow.
Okay. And one thing that you and I always like to look at and compare is what if you're in a negotiation situation and you're considering asking the seller for a price reduction. So let's look at what would happen if you reduce the price by $4,000 versus maybe asking the seller for the same amount of money in a sales concession, $4,000, that could be then used for discount points. Okay, so remembering back to the example I just showed you, at 7% and a $400,000 loan, the payment would be $26.61. In comparison, if you were asking for a price reduction of the same amount of $4,000, that would reduce the payment to $26.39 a month. So what that means is that a price reduction only equates out to $21 a month savings, whereas applying that same money to buying down the interest rate would equate out to about a $67 a month savings for the buyer. And discount points aren't limited to 1 point. A buyer could purchase multiple points. They can purchase points in increments. So you could maybe pay a quarter of a point or half a point or 2 points or 3 points. And so it's just always important to look at how it compares to either a price reduction versus using that same money to buy down your interest rate.
Well, that's great. Thank you so much for showing us yet another way to reduce a monthly mortgage and the overall loan amount.
Yeah, my pleasure. And I look forward to our next get together where we'll talk about yet another exciting strategy.